Hi folks, welcome back. Hope you're doing well. In this video, I'm going to show you how you can use your daily buys and how you can identify your P of 3 on when an asset class is going bullish or bearish. Okay, so let's get started. Before we start this video, if you're new to our YouTube channel, make sure you subscribe it and watch this video till the end. Okay, first of all, our New York time, as you know that everything I describe on time base, so your time should be aligned with my trading view time frame. Okay, so the daylight saving time, okay, is now changed to UTC -4 of New York. Okay, so make sure your time will be UTC -4. Okay, so we are in the gold chart. Okay, so as we seen, price are making higher highs and higher lows, right? So what we do generally, what is the basic behavior of a trend? Open, make a wick, okay, accumulate, distribute and close, right? You will see usually on any bullish or bearish candle. Okay, so what you will do, you will try to identify any entry model between these area or nearby the entry area, so you can catch these move until the liquidity has been taken out, right? So let me show you some quick example on it, right? So what happened, price come to an area of imbalance. Okay, it's reached to area of imbalance and did not close below that area, right? And next day we wait for price to close above, so after that we can take the entry. Okay, so now after that price make a liquidity area, as you can say 1 2 3 4 area of liquidity, then price come to your this inversion fair value gap, okay, with the order block, the higher point, okay, and give your reaction, right? After that you will start seeing the up moves directly 1 2 3 like that. Okay, because before you see the gold was very in a high tightly consolidation. Okay, after this consolidation, price first move always will be the fake one to liquidate, or you can say stop out the trader who are enjoying the ride from below of that price action, right? They keep their stop loss trailing on each swing points, right? So first they stop out, then the actual move you will see in the market. So let's go to the 5-minute time frame. Once you find the thing, you will understand. So here is the one session indicator that I put on my chart that describe the each session individually. Like here is the green one, Asia, there is the London, and this is the New York, right? So here is the thing that once I took the trade, because my trading time is basically a New York, right? The red one. Price tap on Asian session or my unkilled zone hours, and after that you can trade in the rest of day like in London, New York, up to you. But I found the trade best on the Wednesday. What happened on Wednesday? A news come, okay, a news come at 8:30, price go, okay, came back, took the liquidity or a buy position who took the buy for these news, expecting to go prices higher. Okay, they think that market structure shift, we have this order block, price come to this area, price will go up, my stop loss will be this, right? This is the common sense for any retail traders, right? So what happened, price make it what he want to do, then he took the liquidity here, what I'm seeing here, the liquidity, okay, and then price change here in 5 minutes. If you go to 1 minute, you also see the same scenario, the same thing what happening here in the same in 1 minute time frame. So what happened here, the price is, just a moment, the price change its state of delivery. Okay, this is the first candle, second candle, here is the last that candle. Change in the state of delivery. You can direct take entry from here, or you will wait for this fair value gap. Right? If you go to 1 minute time frame, you will find a more accurate area for your entry. Okay, but the people, for me, I can enter direct here. I will show you, because 1 minute time frame will be here will be your entry. Okay, I will show you. For me, this is the turtle soup. Okay, let's take the turtle soup, this candle, this green black one. Price go up, close this, so this will be the order block, and then from this is model number 1 for based on the candle range theory, and we are going to the upside. Okay, all the way to the upside. Then we come to the next day. Okay, as you see, my trading time is always New York, so I need some sort of liquidity. Okay, so here what happened, New York take the London low, London take the high and low of Asia, right? So that day was a news, so it's manipulating. Okay, manipulating the orders, okay, in any ways like a trend line, wedges, or whatever. Okay, and then he took the liquidity of all the orders and then go to the upside. So someday when you didn't see this thing, what that thing, one day you will see the price did not make manipulation and direct go to the distribution. Okay, when it was extremely bullish, so what happened, you will see the manipulation between in the price action. What does this mean by that? You will see the PO3 inside accumulation, manipulation, and distribution. Sorry. Okay, so if you see here, what happened, price took the liquidity of Asia below, and then we have these 1, 2 relative equal lows that price took the liquidity, right, and tap in the fair value gap. I'm right? And then what is give you also here, this is another liquidity, this swing. Okay, this swing point, liquidity, fair value gap, and market structure shift, right? What is giving you a fair value gap, a unicorn model, okay, ICT all model, then you will see the breaker, the fair value gap, the unicorn model, whatever you say. Okay, when you are in the trend, your all retail stuff like it will start working also. Then you only see the bullish, see the engulfing candle, many people will short here and also got stop out. I'm right, because of this retail concept. Okay, so once your time align with the price, you will see the best results, and that's it. And the today price making more high highs when I recording this video. Okay, I hope you learned something from video. So if you don't have any good prop firm, okay, for trading, so I'm giving you a one prop firm which have no evaluation. Okay, sorry, no evaluation means you don't have to pass excuse me for my spellings, you don't have to pass the any challenge. Second thing, you have to just follow their consistent rules. Yeah, it means that you have to take only 4 trades to get the payout. Okay, and the cheapest one, you can get the $25,000 account with 80% profit, okay, 5% daily drawdown, and 10% overall drawdown, okay, and only $107. If it's you put to 95% profit split, it will around 137. Okay, this is a 25k account I'm telling. For if you buy 50k, you will get the same. Just remove the 95, 80% profit, 5% daily drawdown, 10% overall drawdown. Then you will get that one is around $210. That much cheap that Profam is, and they are very good. So make sure you check the link in the description. Once you check my description, you will find that written the cheapest instant funding Profam. So just click that one, join from there, buy that one, and you will let to go. You don't have to do anything. It's very simple. Until next time, be safe.